Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Friday Market Wrap-Up. This is for October 7th today, 2022. We look at what happened on a Friday today in the markets and how we can learn from that, and then look what we can look forward. Right? And remember, we would be having a weekly detailed analysis video for which will be published on Sunday. So subscribe to your channel if you're not done so that you don't miss out. This is going to be a very quick wrap-up. We're not going to get into more details as any detailed studies coming. Flat end to a volatile week. That's what I would describe. Today's move. It was very flattish move. Let's get into the charts and see what does it say. It's a hammer. Right, hammer indicates the wick side on the downside, which says there was buying pressure or support was there from the downside. Bull's presence is what it indicates. Hammer. But a hammer on the top of a rally indicates something. Probably there is a reversal indication, but right now it's neither. I don't think it's in the top. If you consider this swing high as a top, then probably yes, it could mean a further downfall. But it's a daily charts hammer, so it would the move also would be only of that kind, not a big bearishness can not be interpreted from that. But definitely the size of the candle is small. That indicates any small body candle indicates indecisiveness, the presence of the bulls and the bear fight indents. So here the wick size indicates there is some support from the downside, that much you can indicate. But yeah, on the top of a rally, it means something else. It means a reversal of the opposite side of the trend. So I'm not sure if this is really on the top of any trend as of now, but yeah, that's the interpretation of the candlesticks. And what kind of move we had. It was just 17 points lost on Nifty, 0.1%, 0.27% on Banknifty, 100 points lost, 105 points lost on the Banknifty. So it's a small body candle on both indices, Nifty as well as Banknifty. And intraday was interesting. It was gap down. It was very volatile, and what else to say? It was moving. It was a V-shaped recovery move that happened in the Banknifty clearly. Nifty also, it was a V-shaped move going down and then reversing. So it put into a lot of trouble because of the volatile nature of that V-shaped moves. Multiple V's inside each of inside that big one V. There are multiple small V's, and it was all over the place, and it was very tough for trading on a non-DK Friday or for options derivative traders especially. And close below it gave up the 20 DMA, close below that, but maintains the 50 DMA. Nifty and Banknifty, it lost the 20 DMA, and that's it. It's weekly. If you see, it's still in the peer zones, and we have the trend and resistance on the top. We have the rounding pattern, trend and resistance on the top, and it is attempted to come up. That's what you can see. On the week, we don't get into the weekly analysis. We just took at what happened today. That's right. So 17,315 the resistance on the upside, 7,500 resistance on the upside after that, and both are previous highs. 7161 support gap downside, 650, 750, it's a major support on the downside, which is a gap and a previous low both. Banknifty 39759 is a gap on the upside, and 14,000 rounding number, 14,500 previous high. 39,807 is a support on the gap downside, and then 37,950 on the support gap on the Banknifty is what we're talking about, right? All these places is what we seeing the supports, right? Supports here, support here, support here, and support here. 3 supports: downside, upside, resistance, support, right? Nifty also likewise, right? This swing low is support. This one is previous resistance, previous swing low that is now acting as support again. Right, similarly upside piercing highs would act as a resistance. And if you see the Bollinger Bands, it indicates clear contraction with the bearish bias because it is below the 20 DMA, which is the median of the Bollinger Band. Same with Banknifty. Consolidation is what is happening with the bearish bias, as long as it's not closing above the 20 DMA. Climb the trend before getting the trend, the momentum remains sideways, flat. Right, but weak or a weak momentum, if you see, it is climb, but today it is flat momentum. But the main thing that happened today is that it lost the It crossed over the trend indicator ADX crossed over the bear zones, but with weak strength. Banknifty also crossed over the bear zones. That's the thing. So trend has turned negative. Momentum flattish. Price pattern is not great. It's on the negative side. Moving average support resistance is zone. Cup pattern resistance on the weekly. 20 DMA below close, and yeah. So M pattern is still there. All the surprise pattern. Bollinger Band sideways. Momentum trend over. More on the bearish side is what it indicates. Big school of that is a good thing that happened. But it's very difficult close, very careful because it's very close to 1920 levels, 18.81, 2.6% call of that happened today. It is a long bit of that happened in the bank Nifty individuals, and short bit of that happened in the Bank Nifty. Levels 1000 points apart for the expiry that is happening on next week, October 30. 39,000, 40,000 is for Bank Nifty, is the highest put and call writing zones. 0.78 and 0.6 is not bearish, you can't say that. Not bullish also because it is not climbed above the 1. Sectoral performance, if you see today, IT, FMCG, pharma will all fell, but less than 1%. All other major sectors were flattish actually. Pharma is only sector that's in the bull zones actually in the short term. None of the sectors are in the bear zones. That's a good thing. Heavyweights, none of the heavyweights, major heavyweights of high critic shocks, what do you call? They're all in sideways, not in the bear zones. And TCS data performed today 1% down. Other heavyweights were all closing flat. FIA data is not coming, but FIAs were buying in for the last 3 days consecutive, I believe. Today also they must have bought, but AIs were selling yesterday slightly for namesake. So institutional support is not bad since last few days, right? No big selling is coming off as of now. But the worrying factor is that the crude oil is rising along with the dollar rising, so it's a double whammy, right? For the economy of the country, and that will eventually reflect in the market as well. Right? 17.5% of recovery has happened from the downside from the previous low, and the rising momentum sideways, momentum greater than $89 is what crude oil prices are indicating. Dollar is rising up, shooting up. Rupee made a new lowest level of 82.42, and 20-year plus high levels are where the dollar index is 112.1. Right. Gold is kind of resisting below after that 107% recovery from the breached support, and then phase resistance at the place where it breached. The 6 is flat as we know, US index was flat, but it had a red yesterday after a 6% bounce up from the big fall that happened earlier. Major support zone is where it could end up if it is for the falling down. We'll have to keep a close watch of this next week, and pre-market especially. 22% of correction has happened from the top. 6% bounce has happened now. Now it will sustain what we have to see. Right. If job result is the major event that's going to come 7th October, and inflation data is coming next week, 12:40. Right. So that's a wrap up. This is exactly what happened. Nothing. It's a flat end for a very volatile week. What is it? If you see, the week was a truncated week, and we had a downfall Monday, then an up move, and then downfall. So it was very volatile. It was 22 to 19 range was the volatility movements that happened. Very volatile. And this is also the week where Nifty climbed back. You can see that it has climbed back into the sideways from the bearish zone where it had fallen down to earlier. So that's what the week is. The week that took a bounce but did not sustain to take it to the bull zone yet. So that's a Friday, and then we'll have a detailed study tomorrow. The day after tomorrow, the video will be released. Weekly analysis will take a view for the next week, just like how we did last week. We'll take our own week based on the weekly charts and monthly charts, and we'll have stock books and all that. So don't miss out on that. Thanks for watching. Happy trading, happy learning. If you're not subscribed, please subscribe. Thank you.